Hey, Dan Passarelli here. There are a few technical tools that I use in my trading that I think are important and really provide me some good analysis, and I want to share one of them with you right now. It's called Slow Stochastics, and it's a really great tool, particularly for looking for overbought or oversold scenarios. They're basically scenarios when we can identify a potential reversal in a stock. So take a look at this chart here in Coca-Cola. First of all, let me explain what these lines are. The purple line is, let's just call it the slow line, and the red line is, let's just call it the fast line. And you can kind of tell which is which if you forget the color coding, because the red line, it moves more, whereas the purple line is more of a moving average type line that's more smoothed out. Now the 20 line and the 80 line, they're kind of, and I'm just kind of keeping this pretty high level to make it really super easy to understand and not get too technical in it. You can think of them as sort of thresholds. When these lines get above the 80 line, we could be getting into a potential area of overbought, and when it's below 20, we could be in a potential area of oversold, but we use the lines as confirmation, specifically when both lines are above the 80 line and we see the fast line cross below the slow line as it did right here. Well, that indicates an overbought scenario that can be reversing, and we see that played out over about a couple of weeks right there. We can see that just from the opposite perspective here, where both lines were below the 20 line and the fast line crosses above the slow line. And what happened after that? Well, after that, we got follow through for about a good month. So that's one way we look at it. Another way we look at it is with what is known as divergences. So here on the chart itself, we see a lower high, right? We have a little peak making a high here, but it's lower than the previous high. And we see that show up here on the fast line as well, where we have a high here and a high here, but this is a lower high, and that's normal. But now following that, we see the stock make another high relative to the previous high. So this is a higher high than the previous high. But here on the fast line, we have a lower high. So the trick, the little heuristic to look at here is we always want to go with the indicator. If the stock chart is making a higher high while the indicator is making a lower high, we follow the indicator and assume that could be leading to a move, in this case, lower. And we get some confirmation of that with the fast line crossing through the slow line, although it's not above the 80 line, so it's a weaker signal. But these divergences, they can be really strong signals in and of themselves. Now, I like to use any indicator in combination with other indicators too, so I can put as many things on my side as possible, and this is one of them. I hope that helps. This is Dan Passarelli, Trade Smart.